All right. Let's start with the market health check. This is Ken at Tortoise Capital Nightly Strategy Podcast, Wednesday night, 10 February 2021. Coming up on almost a year of this. All right. So today we pushed to 10-day, 30-day, and all-time high. 292.65 we pushed to. And that's where the RL10 peak remained. Now, yesterday we warned about the condition of the RL10 exceeding the price, which is symptomatic of a really strong short-term move, followed by the beginning of maybe a pause. And that causes the RL10 to overshoot. So today we saw a little gap up, then a harsh sell-off of 3 times the size of yesterday's move, and then a 50% recovery. So quite a tradable day, 2 really strong moves throughout the day. So we were prepared for that, and we're going to take a look at a couple of trades that makes that worthwhile. We closed inside Z2. We're at about halfway or 3/4 of the way from Z1 to Z2. The RL10 just peaked today. It turned into summer and peaked, so it hasn't started to roll over yet. But tomorrow, if there's weakness, it would be normal to have that cross the baby dragon tomorrow, because the baby dragon will still be moving up and the RL10 will roll down a little bit, and they will probably meet right around this price level here. Slope of the 30 RL is still very strong. The dragon is wide and sloping up. The PSAR is sloping up and moving up slowly. The appropriate stops, to me, I made the argument yesterday why I believe the stop should be, here, like at the 2-bar low, so that would have triggered today. I also wouldn't have minded the 1-day low right here, which would capture most of that move, which is why I like that as a stop. There were opportunities to get short intraday sooner than that, but in terms of a tactical decision for swing trades, I exited a bunch of those this morning just to make sure we got this locked in. So I've raised a lot of cash. I just feel like this is a nice potential turning point. The last time it looked like this, to me, feels like this move here. Possibly even this one that it rolled over. That's where it peaked. Took 1 day to recover, and then there was a big move down. This one was a Z3, rolled over and slowly was grinding down. But it's also possible for this to be the pause that refreshes and continues. It's just that we've already seen one big sell-off. There's, political shenanigans. I don't think those have economic implications right now. All the impeachment trial is stealing all the oxygen from the room. So I don't think that has, now that we are in the reality of it, I don't think that has much impact on pricing. So I think regular price dynamics are in place, and so I think an orderly rollover here would be the least surprising. And then you have the peak of the dragon in the upper skin here at 386.65, Z1, spine of the dragon, belly of the dragon is also the Bollinger Band mean at 380. The PSAR tomorrow will be 377.5. Fair value has moved up above the edge of the river and is now moving towards the Bollinger Band mean. At this rate, it could catch the Bollinger Band mean in about 5 days out here, which would be pretty amazing. An amazing move for the long-term market. Tactically, I think you've got to be really prepared for a sharp sell again tomorrow, and ready to trade that on the short side. The 10-day range is kind of an amazing it's like 6.1%, and the 30-day range is only 7.1%. So most of this volatility is found just within that 10-day move. It's pretty remarkable. Let's look at these sectors. So the S&P first. So we have the S&P at basically flat. The Qs lost a quarter. IWM, big loser today, minus 0.66. Let's take a look at the sectors that lost. So Ethereum, Bitcoin and blockchain down 6%. S&P, biotech 2.25%. Clean energy 2%. Arc Genomics and Wheaton and Arc Innovations about 1.2%, along with discretionary 1%. Brazil and silver minus 0.8%. And Mexico minus 0.5%. The lithium batteries minus 0.27%. Japan 0.18%. Tech and materials and staples all down fractional. The losing companies, Virgin Galactic 7.5%. Tesla and Neo 5.25%, 2.5%. Big give back in Tesla. You know, the days of wine and roses are over for Tesla. Welcome to the big leagues. So there's the S&P at 0.4. That gives us diamonds were in the plus at 0.18. Treasuries, 2 winning days in a row. Amazing. 0.67. It's coming up to test that crucial 150 price level now. So now let's see the sectors that won today. Finance and healthcare were flat and a fraction. Oil 0.28, emerging markets third. FANGs 1.6. Along with VXX, that little VXX head just started to pay off for me. 1.65. Energy and oil exploration continued their gains. Commercial real estate 3.5. Marijuana 4%. And now some of the winning companies. Twitter just crushing it, 13%. We're still holding some core positions in that from 28 from last year, back in the day. Pretty good book. We identified it as the social media company that was least outrageously priced. It was late to the party, and so we had a chance to buy that at 28. I'm pretty happy about that. Devon and Cliff, 4.5. Are two energy and materials speculative traders. Just love them. NVIDIA 3.5. Nikola 0.67, 0.31. Caterpillar up a fraction. So starting to run out of good candidates, except in that energy sector. And I would say the exception also with Devon and Cliff gave us that leveraged play in energy and materials. Short-term trading opportunities as we try to squeeze things out here at the top of the market. Very tactical trading all over the place today. I mean, for the next week or so. This feels like we got to get through the impeachment, and then let eyes shift to the details of the bailout bill and who's the winners and losers are going to be in that. And then that'll take precedence. All right, it's on the dashboard, still bullish normal. Overbought everywhere except the 2-day, which is back to average. Let me let that come up on the screen. Still risk off and cautionary on the risk Z. Selective long side is possible, but it's feeling, the price action feels vulnerable. So I get what the risk Z is saying. I'm expecting more volatility, and that can go in either direction. So any swing trade to me has to start with a strong day one move intraday that I want to try to grow into a swing trade. That's the general approach I'm taking. The exception being VXX. I think that one is starting to work. I want to take just a quick look at that. Here. Yeah, so the VXX trade here is starting to work. We got that first spike up, and then it cashed, came back to the edge, but importantly, it stayed out of the yellow box. So I think that can be the first spike up. If we see weakness tomorrow, watch that really go. So I'm going to be ready to take that second day of momentum up. All right. Meanwhile, Disney, American Express, and Goldman remain strong. Apple and Merck and Amgen still in the doldrums on the max pains and min pains. Even Tesla now. Is now a max pain. I added them to the S&P 100. Technically they're probably not in it. Maybe they are. But I needed to get some visibility on that. So that's what that is. I also want to note DIA doing very well compared to the S&P 100. All right. To the Dow tactical summary. Let that come up on your screen. Lots of dojis today. Minor breakouts in Chevron and Goldman Sachs, but otherwise everything was kind of like an inside day today, backing and filling. There's one 5DD today, that's Visa, but it doesn't test out well on the auto framer. Only 3 of them do. Amgen, which turned in a good performance today finally at 0.76, is still 10 to 1. And then 3M and Merck are in pretty good shape. And if I was going to favor one, I would favor 3M because it finished today in the doji. Otherwise, not much to pick from. Even less choices in the ETFs, only 5 dojis. Couple breakouts now in DIA and emerging markets. It's their turn to move to the front. Real estate, just quietly getting it done as a defensive play here. Maybe it's time for that. Oil had another surge day, as did oil exploration. So you got treasuries on a 4.9 to 1, silver at 3.8 to 1. Again, not much to choose from. If I was looking for momentum, I would say tomorrow I'm expecting volatility spikes down. So I think there'll be some intraday action on there. Look for the action in IWM and Mexico using the hybrid frogs right from the open. A handful of good plays still in the auto framer featuring, Amgen, Treasury, Silver, Merck, and 3M. There's your framing data right there for you. Amgen was like a doji today, so it's still 3 to 1 on the stretch. 3M also 3 to 1. Want to jump to the multi-time frame NDXs. American Express, Goldman Sachs, JP Morgan all did pretty well today. And here's Amgen finally starting to show a little bit of strength, along with United Health. That was the out-of-favor healthcare sector we looked at earlier this week. And there's Johnson & Johnson. So maybe it's time for these guys to cycle to the front, along with Walgreens. So that maybe feels like a stealth opportunity. Would we see that in healthcare, reflected in healthcare? Yes, we would. So XLV has been lagging on the 10-day and 30-day, but today turned in a pretty good performance with 127 on the 2-day NDX. That whole sector is starting to receive some capital. Otherwise, the energy sector really dominated today. Exploration, oil, and XLE, then emerging markets and real estate in the top 2 positions. Pretty strong. That's everything I want to cover on the daily. I don't have time tonight for the bar by bar, but what I do want to do is an expedited version of this. So here's one that featured, gap down, sell off, and then stabilized. So we put our standard trade frame on that and trade this in the usual way. We might see a frame like this where 4 is a dragon, collapsing dragon. 5 is a collapsing dragon on the RL10. 6 is like a Z2 breakdown. 1, 2, and 3 are a layered approach to buying it prior to crossing the Bollinger Band mean. We take our standard approach. We get short, with a stop. Stop in here in the usual way. If we take the Wu Wei exit, this comes out here, drops down to the basically the Bollinger Band mean, and it's just going to look like this. And our Wu Wei exit is tracking the Bollinger Band mean here. On this kind of a breakdown, it wouldn't offend me if you then followed that a little bit and then said maybe, the Z1 or the PSAR, something like that, or just said, hey, I want to go to a 2-bar low and lock that in and start capturing more of those pieces. So the Z1 exit would have gotten out right back a reasonable exit on this whole package. Kind of right in this area because you're getting either the RLXD crossover or the PSAR, and really, when you see this kind of failure to fail further, you don't mind capturing this gain right here on an initial risk of that half the yellow box. So you're going to get 1, 2, 3, 4, 5, 5.5 on the first position, and then depending on whether or not you're adding positions in there. Now you got a decision to make in here. Do you kind of take this frame now? Might do something like this. You play the breakout either way. Short again. So you won't lose money on that trade. If you get short here and you have a move in that direction, you might just say, hey, you know what? I'm just going to take the PSAR exit, and you'll make that little piece. And then you might play for the supported spring crossing. You might have exited here. If you did, you should re-enter here. So you might make this little stretch against the risk of this. So you pick up the third. And now this one with a risk probably right to about there. And you're aiming for the VWAP. Probably be happy to take that one. And you make this trade here. So again, just on one position in a relaxed way, and just trading the patterns. That's a blockchain. That one was a decisive move down today. Here's one where we have, let's describe what's going on. What do we see? We had a close down here. Gap up, sell off, recover sideways into the VWAP. Now you can see the Z3 lines compressing, so this sets up like a Z3 breakout. So one is just above Z2, 4 is at Z2, so that's like a Z2 breakout. 1 and 4 is Z2, 2 and 5 is about a Z3, 3 and 6 are standard symmetrical plays. So you might just straddle the price, take half a box of risk, short, second, third position. So this person's being aggressive, not just playing the one, bang. Now you're by this point in the trade, you get three positions in. So you get three positions in. It wouldn't hurt your feelings if you just locked in those gains just to see what you can get. Yeah, you're probably wishing you had four positions in now. So you probably drop that in. This will be a massive win. By this time, you see that you start seeing that collapsing bar now has gone into a consolidation bar. So you might accelerate and bang, there you go. So you probably get an exit somewhere in here. By this time, you might have decided to play this, or if you get a crossing of the dragon, you might play that. You would have exited, I suspect, somewhere in here. That would be half a of a risk box, because your risk box is probably, if you were playing to the PSAR, you take half an execution R loss, and then you're probably ready to buy this breakout again. Nope. So you got to get this thing short. Collapsing dragon. Oh, damn it. Yeah, collapsing dragon now with the let's see, probably the stop, like top of the dragon. Scratch. So you're now looking at a turning point. You're probably ready to trade this breakout, something like that, with the stop at the dragon. Get paid, then probably exit at the Bollinger Band mean. So you make some pretty good coin on this one. Remember, that first one is on three positions. That gain there is on three positions. This one was a scratch. We never got this one. That one never fired. And then we make a coin on this one. So, yeah, a three position win on that great big green box is massive goodness. Yeah. Eugene points out that, yeah, Kim Anderson probably would have had this trade on the Anderson regression line stretch. in here like a 1, 2, 3 entry, and then she probably cashes that one because she's fast. Me, I'm slower. If I was waiting for this, I'd probably get trapped right there and then cut my losses here and then be slow to get back in. Final one, just a quick look, quick speed run in here. Again, we have a gap up, but which kind of stabilizes really fast into this long sideways quiet channel. Now you can see the Z3 pinch happening, and then that's just a standard framing. Three shorts, then a big one. So this one's going to be the Russell. Again, massive wins, and then a recovery, with an exit probably down in here. So again, you're going to have great gains. Just by following the pattern. That Z3 pinch is just massive goodness, massive goodness. And then the supported spring crossing, if you wait for that thing to turn to spring, as you should, it fails to, so you're supposed to get the collapsing dragon. My spider sense is that you could stop and reverse in here on the supported spring crossing, and you're playing for a return to the VWAP, and you see that, you probably just take a sniper exit in there, and you make your bank in here. And this one made bank on this move. So this is the Russell. Just on the morning move, and that's not bad. A couple hours in the morning, get the breakout from Z3 pinch. Second leg down, you get a little taste, and then a recovery trade on the SSC. So nothing to sneeze at. There was even a second leg up if you played Kata 2, probably up into here. You might have made that gain. Okay, that's everything I want to cover. Yeah, Luis says we have to think about correlations. Bitcoin inside Tesla, Tesla inside PBW, all correlated to a point. Well, yeah, that's where you're getting a lot of the volatility. You can overthink that. Remember, Tesla's worth about $800 billion. And they bought 1.5 billion of Bitcoin. So Bitcoin represents 0.1% of their market cap. So that doesn't really have much effect on them in terms of their net worth and book value. So I wouldn't worry about that. And then its percentage of PBW is like 5% or less. So, at some point, there are correlations everywhere, and you just have to take a look at the reliability of volatility, how liquid they are. I don't worry about those correlations. I just play the statistics on the movement of the instrument. That's what you actually care. What you care about is the instrument has enough liquidity and volatility to be tradable, and then you just trade the pattern. So the fact that those are all cross-correlated just means they're all volatile. It means that all of them are legit targets for trading. So the cross-correlations, the mathematics of that, trying to come up with an edge, is well beyond human capacity to do anything with, unless it's augmented by neural networks and machine learning that's micro trading. So I wouldn't worry about those at all. Okay, I'll get this published and posted and hung in the usual spot, and then I got to get on to some other work. Let's give you some time to do your prep. So, thanks for hanging in there. For those of you the patterns we showed tonight, there's hundreds of examples of bar by bars in the previous videos if you want to get in and rework those. Those are the three that were interesting. There were three interesting ones in there today. Blockchain, IWM, and PBW, all of them showed very tradable patterns on a volatile bit. Okay, so take good care, and we will see you tomorrow.